Hello, everyone. Welcome back to the Calgary Real Estate Channel. Now, if you're new here, a big welcome to you. Today, we're diving deep into the heartbeat of Calgary real estate scene with our December 2023 market report. Now, this is just not data; it's insight you need to make informed decisions in this dynamic market. Now, if you're a potential buyer, seller, or investor, this video is your compass. But here's the thing: the real magic happens when you engage. So drop a comment below if you're craving the full market report. Consider your VIP pass to the trends shaping detached, semi-detached, row and row condo segments. I know numbers can be overwhelming, but fear not. I'm your guide to decoding the real estate matrix. After today, you won't just have data, you'll have a clear understanding of the market pulse. Now, whether you're envisioning your dream home, strategizing a sale, or even eyeing lucrative investments, this video is tailor-made for you. So buckle up, hit the like button, subscribe if you haven't already, and let's unravel the secrets of Calgary's real estate landscape together. Your journey to property mastery starts right now. Now, let's start off with detached homes. Limited supply choice for homes priced below $700,000 has been the primary cause of the decline in detached home sales. Now, while November reported a marginal gain over last year, year-to-date sales have declined by 20%. Last year was a record year, mainly because of such low interest rates. Now, November saw a rise in new listings compared to the previous year, but higher prices drove most of the gains. Now, this left the detached market with exceptionally tight conditions for prices below $700,000. Most homes that come under $700,000 do go fast, and now some are even going over list price. They call it like competitive multiple markets, multiple offers. Now, we are getting more balanced conditions for prices for homes that are priced over $700,000. Overall, the month of supply remains exceptionally low at under 2 months, meaning if there is no more new homes coming up for sale, in 2 months there would be 0 homes for sale. Also, persistently tight conditions continue to cause further price gains in the detached market. Right now, the price is about $700,000 in a year. In my opinion, if it goes up just as it did, up 10%, we should be close to $750,000, $760,000 for the average price in Calgary detached. Now, while detached homes are much higher than last year's levels in every district, year-to-date gains are the highest in the most affordable districts, the Northeast and the East. All right, let's take a look at Real Info Report, see what they have to say. Now, this is for detached properties. We're almost at the balanced market here. You see this here? Now, what this is saying is that as you can see, 57% of homes that listed get that sold. That's pretty balanced. Really, 30 to 50% means balanced, but anything over that means seller's market. But this is a different, there's 2 different markets in the sellers. One is over $700,000 and one's below $700,000. But main thing here to let you know is that still the demand is high and it's still a seller's market. That's important to know whether you're buying or selling a property. Benchmark price, go look at these small percentages that are going up every month. Now, even if it goes up only 1 or 2% a month, over the year, that's 12 to 14%. That's huge. The average per year over a 50-year period is 2% for the year. And this is happening in a month. So right now, our homes are basically going up 10 times faster than they should be, than the normal range of the last 40 to 50 years. Now, if you take a look at over the last 10 years, what the prices increase it's gone up by 31% right here. You see that, right? 31% right here. Average for that is usually going to be 2%. Because of the low interest rate and the huge demand that's built up now, the immigration, we're surpassed that. And if you take a look at 2022 right here, you can see that just the 1 year, it's gone up 14%. What's this telling you is that the demand is much greater than the supply. That's the base thing it's telling you, okay? Now, that's for detached homes only. Now, if you take a look at next moving forward is that let's go look at the Souls versus listings. This is another interesting fact here. Okay, now, right here, this is saying approximately 50% homes are getting sold. However, the homes that are getting sold are below 700. Most of the homes that aren't sold are over $700,000. This graph just basically is telling you the number of homes that were listed and sold were all below the historical average, mainly because, again, the demand is much greater than supply. Okay. Now, if we take a look at the days on market, it's still very low here. See 32 days here. That's the average days on market, meaning by the time the house gets listed and it gets sold is 32 days, which is pretty well almost immediately, because you got to think 2 to 3 weeks for conditions to be waived. So overall, let's take a look at where houses are selling. Now, as you can see here, most of the homes are sold in this range here, $500,000 to $700,000. In the higher end area, over, let's say, $800,000 to $2 million, which a lot of homes are getting built now these days, is that these homes don't get sold very quickly. They take time because there's buyers for that. There's homes now being listed at $10 million, $8 million, $5 million, because the Calgary is a wealthy city and people can actually afford that. So in conclusion, we have two markets now: homes under 700,000 and homes over 700,000. Totally two different markets. Homes under 700,000 are selling fast and there's a high demand for them. Over 700,000, not as much demand, but still a demand. So it was still in the seller's market. Now, for semi-detached homes, meaning at least one wall is attached to another house, November saw a boost in new listings compared to last year. This helped to prevent a year-to-year over decline in the inventory levels. Most of those new listings are from new infills getting built, which are quite expensive, over $900,000. Now, however, inventory levels are still 40% below typical levels seen in November. Meaning that demand is still high, but also tells you when inventory levels do creep up, the demand is high, the builders are trying to meet the demand, the prices will stabilize. But right now, the prices will continue to increase just because there's not enough inventory. Now, and again, it is proven in the sales to listings ratio of 77%, meaning you have a 77% chance of when you list your semi-detached home, it will get sold. That is also telling you there's only a 2-month supply of homes, semi-detached homes. Meaning if there's no more new listings, there would be no new homes for sale in 2 months. So conditions are tight. Now, especially for homes below $700,000. Now, despite tight conditions, benchmark prices remain stable compared to last month. However, in an unadjusted benchmark price of $628, prices are still 12% higher than last year, meaning these homes have gone up 12% in 1 year. Don't forget, the expected range is supposed to be 2%. Now, the year-to-date average benchmark price has risen nearly by 7%, with the largest gains, again, Northeast and East districts. This used to be the lowest demand in these areas. However, since the prices are the most attractive, people are willing to move there now. All right, let's take a look at the data on semi-detached report. First of all, right away, you can see it's almost a balanced market. Meaning there's a 50% chance when your house gets listed, it'll be sold in that month. So it's increased quite a bit since June, when there's a 90% chance of selling your home within that month there. Amazing thing is here, the price is $628, which is not far from the detached, which is $700. Now, what's that telling you is that the detached homes will definitely go up up next year. Right now they're at 700, and there's just not enough margin between 628 and 700. You would think there were going to be people will spend a little bit more to buy a detached home, but because there's no inventory of detached homes, people are buying semi-detached homes. So the prices have gone up quite a bit here. Okay. Now, this is basically overall last 13 months, they've gone up. It's a benchmark price, and it's gone up from $559,000 to $628,000. Just the demand has been so high. That's all. Now, if you take a 10-year average, the normal for 10-year average is usually 2% per year. So over 10 years, it should be around 20%. However, the demand after COVID has been so high because of immigration, as you can see, 30% in 1 year, 12% in 1 year as well. That 10-year average is now 47%. It's almost double of what the normal average is, and all in the last 2 years. Again, what is that telling you? Most likely this will stabilize, but not at the current rate now because the demand far exceeds supply. One thing is to notice how many listings there are. Right now for November 2023, there was 272 listings, and out of those, 140 got sold. So about 50%, okay? However, what's interesting is what it is that look where they're getting sold. Look, this is where they're getting sold right here. Okay, that's where they're getting sold. Right there is in the $400,000 to $600,000 range, not over $700,000 range at all. Okay, right here. As you can see, that's almost 50% right there. Now, if you take a look at over $700,000 right here, this is the new infills that are getting built, and they're very expensive. 800, 900,000 semi-detached homes, and 100 homes, 200 homes. That's what's driving up the average price. But really, most people are buying in the $400,000 to $600,000 range. And as you can see, the days on market here, days on market is 28 days. That's the average. It's almost two different markets. Semi-detached homes. Under right here, that's the middle mark here. These homes here under 700,000, big demand, they get sold fast. Over $700,000 is a little different. Still demand, they take a little longer to sell, and it's more. They're driving up the average. But really, the people are buying under 700,000. All right, now moving on to row homes. New listings rose again this month compared to last year. Now, 370 new listings were met with 267 sales. That's a high listings to sales ratio. And for the first time since 2021, the sales to new listings fell below for 75%. That's telling you this market is huge. It has been for the last couple of years, and will continue to have high demand just because of the price range. Now, the jump in new listings was enough to support a gain in inventory levels compared to last month and last year. While inventories are still nearly half the levels we traditionally see, this did help cause the months of supply to push up to 1.6 months. Now, when inventory levels do catch up, we are going to see more of a balanced market. But right now, it's not a balanced market; it's a seller's market, and buyers are buying these properties. They're buying these properties as quick as possible. Now, a significant improvement for less than 1 month of supply has persisted over the last 7 months. That's how high the demand is. 1 month of supply. Now, while conditions are much more balanced in the higher price ranges, there's less than 1 month of supply for homes priced under $500,000. Again, you have two segments of the same area, same row homes. You have segment of row homes over $500,000 and under $500,000. Now, despite the shift away from exceptionally tight conditions, prices still rose over last month and last year. That's because what's happening is row homes under 500,000, 340, 350, huge demand for that. Now, as of November, the unadjusted price mark reached 429. That's a whopping 20%, 21% higher than last November, an average year gain of nearly 13%. This segment of real estate, row homes, is easily, I feel, the most highly demand, and this will continue. The prices will continue to go up. All right, now let's take a look at the data of row homes. As you can see, it still says seller's market right here. Okay, still a seller's market there. Meaning, if you are selling a row home, you have a really good chance of selling it, and you won't have to reduce the price if it's properly listed. Now, moving forward, we're in December now. So let's take a look at what happened last year in January and moving forward So this year, but in 2023. Now, this year, what happened was in January, it's the same thing as December, about 61% of homes got sold. But look how quickly it ramps up here, okay? Look at this. 93% of homes got sold. 96, 105, 123. Look at this here. The demand far exceeded supply. There's more homes getting sold than there was actually listed, which I don't know how that happens, but that's what they're saying here. Okay. Now, next year, 2024, there should be no reason why this doesn't happen again. Main reason being is that there's just not enough inventory. Take a look at here. There's only 408 listings, and for a city of 1.6 million people. Now, moving forward, that's part one. Now, the average price is $429, which is a great deal. Now, this used to be the average price of a single detached home. Not anymore. It's of a row home there. So, and don't forget, incomes haven't really increased over the last several years. So, people are buying what they can get for this price range. Now, amazing thing is it's still going up. Every month, as you noticed here, it's still going up. Look at this. 1% a month is still going up there. Don't forget, 1% a month is basically a 12% average over the year, which is normally, over the last 50 years, a 2% is good for the year, and now it's going up 1% per year. So we are in a very, very high demand market, and this might change, but it's not going to change in the current market as we're in the current business cycle we're in right now. If you take a look at the trend, this is kind of amazing here as well, is that even though it went up 25% in the last 9 years, most of that gain here, you'll see, was in the last 3 years. That's the way Calgary is. This is the amazing part. And this is what people forget. For 4 years, prices went down in Calgary. Nobody wanted to live in a townhome. It just went continually going down. Now we're just slowly catching up there. Okay? So this 25% really is in the last 3 years, which is quite attractive. So now let's take a look at this. The other thing here. This is the actives and solds here. 50% are getting sold. And if you take a look at if you take a look at here, what happened this year in the springtime, massive amount of properties got sold. 400, 416, 497, 525. Now, if you take a look at the solds now, it's 267. It's half of what was getting sold. Why is that? Because there's just not enough inventory. That's all. There, even though there's 408 homes active right now, but they're in the higher end. Okay. Days on market, it gets sold right away. 22 days, that's not even a month. We usually condition dates usually takes 2 to 3 weeks. So it's selling pretty well right away. Now, what prices are they selling in? Again, I think I'll take a look at it right here. It is in the lower end here. 50% are getting sold less than $600,000. if you take a look at higher end homes, these are row homes, don't forget, where there's your attached walls. There's row homes that are still getting sold. 174 homes got sold that over $600,000 a row home. Now you can also buy a row home for $200,000 to $300,000. So it really skews the average, but the percentage, the majority of row homes are getting sold are in this area. They're very affordable, and they're 1,000, 1,200 square feet, 2 to 3 bedrooms, 2.5 bathrooms, very affordable. Moving on, what we see is that next we're going to do condominiums. All right, now let's talk about condos. Easiest to get in, hardest to get out. Meaning they're the most affordable real estate you can buy. Condos, hundreds of condos are being built in Calgary now. Okay. Now, thanks to the relative affordability of apartment-style homes, sales continue to reach record highs in November, now contributing year-to-date sales of 7,487. That's almost 30% all the homes getting sold. Now, fun fact, that 30%, that used to be 2% about 30, 40 years ago. Very few people lived in condos in Calgary in the 90s and 80s. Only because of the price has gone up so much for detached homes, people have actually started buying condos now. Now, with 1 month left in the year, sales have already surpassed last year's record high. That's no surprise because the number of immigrants coming into Calgary from immigration from overseas, Ontario, they're looking for places to buy, and the easiest, most cheapest real estate to buy is condos. That's what they're buying right now. Now, also, while inventory levels are similar to last year with less than 2 months supply, conditions still favor the seller, placing further upward pressure on prices. Now, amazingly, the benchmark price is $320,000. That's the average price of a condo being sold in Calgary in November. That is ridiculously cheap compared to the other major cities in Canada. And can you believe that $320,000 is with a 10% increase over year to year? So they were even cheaper last year. Now, although year-to-date price gains have occurred across every district, with some of the largest gains, again, northeast and east. Why is that? Those are the least desirable areas, but people are now forsaking the reputation of these areas and saying the new people really don't care, and they'll buy where they find most affordable housing. All right, now let's take a look at the market data for condominiums. As you can see, it is still a seller's market right here. Meaning, what that basically means, the absorption rate is over 50%. Basically, the condos that get listed in a given month, that number, 50% of that number is sold within that month. So, if you take a look at here, 882 listings and 562 sold. That 882 listings is probably the largest, biggest number in all the segments of the real estate in Calgary right now. Okay, that's important to know. And take a look at here. Basically, this is the absorption rate here. It's going, if you see that 50%, and it's back to 50% right now as well. Meaning, really, that it's not easy to sell a condo, which is it's hardest to sell a condo right now in all the segments. Now, this is it's still hard to believe that condos in Calgary, the average is $320,000. The reason being that it's so cheap is because for many years it did decrease. If you take a look at from 2016 for 4 or 5 years, prices decreased. So if you bought a condo in 2014 for roughly a little under $300,000, 5-6 years later, you could sell that for $250,000. You lost money every year. Now, this is the first year in the last 10 years that it's gone over $292. It took 10 years to achieve the price that a condo you sold in 2014. So it's been a tough go for condo owners in Calgary. Okay. However, now it's changing for the foreseeable future, but I don't know for how much longer. Now, what's happened is that, again, what you can see here, the active listings has gone down, and same with the sold listings has gone down. Now, I don't know if that's a fluctuation or just a small gap, and then next year it will go up, or it'll start to decrease as well. Because it's still a seller's market, it still takes less than 1 month to sell it. Look at this, days on market is still less than 30 days right here. Okay. Now let's take a look at the market distribution. What price are condos selling at the most here? This is pretty interesting here. Now, most of the condos are sold between $200,000 and $400,000. Think of that, $200,000 to $400,000. That's usually that's about $300 to $400 a square foot. The reason why these condos are so cheap in Calgary is because very few condos were built in the last several years just because they were not getting sold. In 2020, there was a 9-month supply of condos. So there's no reason to build. Most of these condos now getting sold are older condos that were not very appealing and need a lot of work. Now with the new condos coming up, they're more expensive, but they haven't caught up yet. They're still getting built. Once those are built in the next several years, you will see a significant change in the condo prices for newer condos. Older condos prices will remain low, or they might even drop.